got a call like in 2 hours, basically. Yeah, man. Yeah. So what you want to start with, kind of like just kind of going over the whole process, and then once if you have any questions, I can answer those, and then we can get into like SMT stuff and kind of the more advanced type of things. Okay, cool, cool. So, okay, got you. So I'm just gonna go like briefly over like the process, okay? That we kind of look for. So, really, we are starting with candle closes, like really the foundation of my model. So where is this at? It's a couple of things, what we're combining to actually get narrative. It's phases of price delivery on the higher time frame, the 1 hour, the 4 hour. It's just swing points and then open, high, low, close, right? This is what actually supports price delivery from like a reversal point to a target, which is like a model, right? When we think about models, they're simply just these three. It's just internal to external. This can be on the daily, the 1 hour, or the 4 hour. This is go ahead. Right. Yep. Yep. But these are what actually form the low of day on the 1 hour and the 4 hour, pretty much every single day. So we're looking for some reversal point, right? To put it simply, um, like internal to external, external internal, and then my favorite, some sort of manipulation, maybe of a range low or a swing low, and then price expands into the opposing side of the range, right? Those are just simply the three models. Now this can help us get daily bias on the higher time frame. So if you go like here, when we think about highs and lows, we're really trying to frame like relevant swings. I'm sure you watched the what expansion model course. That's kind of what AM focuses on. It's a really good thing to focus on. So it's like just spaced out highs and lows. Like this is what I use like every single day when I refer to like this model here, some sort of manipulation. Like it needs to be a relevant swing, right? Not a failure swing, ideally. Um, Yeah, like that's pretty much, yeah. I really try to focus on highs and lows. Now, once we actually manipulate something, and then when we form internal levels or opposing candles, this is when I'll use, something like this, like internal to external. It's away from a protected swing towards a draw on liquidity, right? So you could really count this as a internal. Honestly, it's just a new day opening gap. It's just a gap that price has to fill. But like on its way, like some sort of like SMT or whatever, on its way, like these gaps should hold and these opposing candles I want to hold. That's when I really pay attention to, internal to external, etc. When it's on its way into a draw on liquidity. And that's for intraday price action too. So if I go over like over here, like this day, for example, like opposing candles, once we actually hit this relevant swing, so like fair value gaps are literally just like lower time frame swing lows. So as you see, this is like a swing low, like this gap. There's just you see this space between these lows. So like ideally we manipulate this, which is what we do. And then this is when I'm paying attention to opposing candles, but you can fractalize that. So it can literally be the daily chart where like the daily maybe trades into a high or something, and then we get a daily opposing candle, and we start to expand away. We have a fair value gap. Like this is when I want to see price hold on its way to like this low down here. Maybe this is like a order paying ranges model. This is like the range high. This is the range low. But trading away from that, this is when I look for opposing candles. This could also be like the 1 hour or the 4 hour. Doesn't matter. So that's generally when I really care about opposing candles, is just supporting expansion into some sort of level, right? So those are just the models, right, that we use every single day to form the high and low of day now. And obviously we trade swing points away from them, right? Pretty simple stuff. I'm pretty sure you've already seen the stream. But this is the really important part. It's actually this. It's combining that with the way the candle forms. So what I mean by that is if you're bullish, ideally it opens low, maybe ideally the previous day is bullish too or something, and let's say it's internal to external. If price opens low into that internal level, it's already, that the model is already bullish, right? Where we want to see like continuation. But the fact that the candle's also opening low first, that's also supporting bullishness. So it's like a double, it's like both of those things supporting each other. It's like the model is supported by the way the daily candle's forming. So I call this like candle profiles in a sense. Daily profiles is really just like when the low day was created essentially, right? So if it's London, then we expect near continuation. But this is probably more important, the way the candle actually forms, because this tells us how it's likely to close. And it also tells us how far it's likely to expand via wick size, right? So if it opens low first, right, ideally creates a small wick that automatically supports some bullish run, right? And then this is where we actually anticipate, once we actually CSD or whatnot and create fair value gaps away from the low of day, this is when I care about fair value gaps, intra-candle or order blocks intra-candle, because they should support price higher, right? So if I just go to like an example, like these examples, this is what I mean by that, is if price is already bullish and we could just mechanically gauge off the previous candle's close, let's say there's a fair value gap just in the upper half of this, candle's range. We're just looking for key levels in the upper half of this candle's range or near the opening price. If you want to make it even more simple, it's literally just near the opening price of a new candle, because that would force a small wick, right? So it's like this needs to hold if we're going to create this small wick. If this fails, likely going to create a large wick. But this is where a multitude of things come into play. It's phases of price, like the way we deliver into a key level, that's very important, because if we retrace into a key level, then that's added narrative that we will continue, right? And if we open low into the key level as well, that's, again, it's added narrative, right? So it's like the way the candle is opening low and the way that we're getting to that level and what we did prior to us hitting the key level is very important, right? Because if we open low into a key level with no established high of the day, this is the perfect place to create an established low of the day, right? It's also opening low first, like I said. And then, the model is simple. You're just trading 4-hour expansion candles away from the low of the day. Now, this is something I haven't shown anyone, but pretty soon I'll probably go over, I guess these slides probably in the lens. Yeah, probably. Now, this is going to talk about refinements, and then we'll get into a bunch of examples, but your first refinement or your invalidation level is marking out previous candle EQ, right? So if it's a reversal candle, mark out that wick, previous range, and you ideally want to see a continuation away from that candle too. So it's simply a swing point. This is on any time frame, but specifically the daily. This slideshow is really talking about the daily here. So obviously you want to see candle 3 put its low in this range, so it formed a small wick. So this is what it would look like, right? And if you get any type of expansion candle, you want to mark out EQ of the whole range, not just the wick, right? You want to see that continuation in the upper half, right? This just forces a small wick. That's the only reason why we do this. It's like a mechanical way of defining wick size, setting it in validation. So what you're going to do, you're going to refine that level, right? Then you're going to look within this range, right, for a 1-hour or 4-hour key level, right? Because that's what we frame the low of the day from. It's 1 hour or 4-hour key levels, right? So the only key levels that we concern ourselves with is just fair value gaps, order blocks, and lows, right? Or like fair swings, or like some sort of manipulation within the upper half, right? And this is where you ideally want the low of day to form at, right? It doesn't have to hit the key level. This is our invalidation level, right? So this is what it would look like, right? Where the candle opens low into that, expands away, right? Here's an order block. Here's these relevant lows, right? These are relevant swings. Ideally, we don't care if price just sweeps this. We need this to be swept, right? Because this is a fair swing to this low, right? But these are not fair swings. So if we manipulate this level, it's a protected swing, right? So now when we actually hit this level, this invalidation level, or any level to form the low of day, this is the ideal scenario to get involved, because you're getting involved within the wick, right? Now, as soon as we hit that key level and form a swing point, so either a candle 2 closure or a candle 3 closure, this is where we want to see expansion away from that level, right? So really, as soon as you get this candle 2 closure, your invalidation now, it's like the same thing, but we fractalize it. So it's no longer EQ, right? That got refined to this fair value gap. But now once we get a swing point in that fair value gap, it's no longer the fair value gap, it's the swing point now, because this needs to hold in order for price to expand away from that swing point. Does that make sense? So, yep. So on the lower time frame, you're just going to do the same thing. You're going to look for an invalidation level within this candle, right? Like the 5-minute, to validate the swing point. Now, what if price doesn't expand away from the swing point that was created in the gap? Well, this is when you're going to require the swing point low to be swept, and this is like a new key level essentially. It's not really the fair value gap anymore. It's the swing point within the fair value gap, because this is what actually creates a protected swing, right? If there's like a low down here and then another low gets put in, like we want this to be swept out, right? This would create a protected swing to trade away from, right? And also, um, I mean, it's happening in the gap, but it's important that this has to be swept because now this is just consolidation essentially in a key level. So how do we trade away from consolidation? Ideally, manipulate that low. So what you're going to have to require is a manipulation, right, of that low because this is clearly not a reversal. So therefore, we have to create one. So this once we hit that low in that key level, this is when the process starts over. We need another swing point, right? Simple. So once we get that swing point, we can trade away from it. Now, what if, again, we fail to manipulate this low? Well, this is when you totally scrap the whole idea of this. It can be continuation or the protraction phase of the daily candle. What I mean by protraction phase is the open low. So if you're getting involved in the open low, which is not always, but that's ideally when you get involved. What I mean by that is if we, let's say, we swept out this low or like price didn't expand away, we consolidated, we would require this right here, like a sweep. But if price doesn't manipulate this low right here, then it's like it's probably not going to reverse because then we're just creating lower lows in a fair value gap, right? You don't want to see that, right? Or in any key level, it wouldn't be like a strong key level. So this is it. You invalidate that key level entirely. So you really give it two chances: the first swing point, and then if that fails, then you require the low, right? And that has to be manipulated, right? Yeah, exactly. So like you can mechanically define like pretty much everything. And I'm gonna show you how we do that. So this is specifically when the daily candle actually opens low into a key level, and we do get that swing point, and price actually starts to trade away, right? So at this point here, like we can only trade candle 3 and candle 4, right? But once price starts to trade away, it's generally going to create some sort of like key level. So to trade the protraction phase, like the actual wick to form the low of day, it's the 1 hour and 4 hour key level, right? But once we start to trade away from that for continuation away from the low of day, we can use 30-minute and 1 hour, right? It doesn't have to be 4 hour anymore. So what this is talking about is the CSD to actually form the low of day. Now, this is not something I require, but this is very specific to, it's really the timings of the day. And this is what AM talks about. So what this is talking about here, the 1 hour and 30-minute, is if we have an Asia reversal or a London reversal, we require an hourly or 30-minute CSD because when we come to New York session, a lot of time has passed, right? So there's enough time for an hourly CSD or a 30-minute CSD to form, right? What about like pre-New York? I would ideally want a 50-minute or 30-minute CSD. And then during like drivers, it's like a 5-minute or 15-minute. Really, you really don't need one. Like the swing point is fine enough because price is so volatile that if you try to require like a higher time from CSD, you're generally just gonna get left behind, yeah, because price will just expand in like a couple of 1 hour candles, pretty much, and you'll miss the whole thing. So, yeah, yeah, it's horrible. So this is important, right? So when you get that CSD, that first CSD, this is when we, like I said, require 1 hour or 30-minute key levels. So this is generally when we're going to use opposing candles or fair value gaps to support continuation, right? So if we get a opposing candle that forms off of that initial CSD that formed low of day, we get a propulsion. This now becomes your new invalidation level. It's no longer, so pretty much what we're doing here is like we're doing this. This is your first invalidation level, 50%. Now it's the key level within that range. So this now becomes your invalidation level. Now once we form that swing point, this becomes your invalidation level. Once price trades away from that swing point, creating opposing candles, this becomes your invalidation level. So this is where you want ideally, this is a possible entry. If price retests this, you would simply do the same thing. You'd wait for a swing point away from that key level. And now this wouldn't be your invalidation level. The swing point would. Once price, let's say price doesn't retest this, but it creates a fair value gap. Right now we don't require this to be tested, but ideally, this gets, respected, respected, right? Because in expansion, what do we not want to see? We don't want to see super deep retracements. It's like today on NQ, total invalidation. NQ being the strongest asset and it's having these super deep retracements, you simply avoid it. But once we hit a key level, I traded silver. I'll post that later. I took a little silver short. But here, right, once we have that fair value gap away from the low of day or any CSD or whatever, this becomes your invalidation for continuation, right? So this first CSD is your invalidation for the reversal profile. And then we're gonna later on, after we start to expand away from this level, we're gonna create invalidations for continuations, right? So like this fair value gap, for example, like this has to hold for price to continue. So as soon as we hit that level, you wanna see this hold, and you'd do the same process like this right here. Swing point, if it doesn't reverse from swing point, then you require manipulation. And I literally have an example of like this week happening exactly like this. So what, so yeah, it's gonna look like this. So let's go over here now. So once we have that reversal, right, on the 1 hour or 30-minute, whatever time, it just matters what the time, the low day was formed. This is when we can look for continuation, obviously, right? We can look for swing points, right? Now, once we, like I said, create that opposing candle, this is what we want to see hold, right? Because, again, we don't want to see this go all the way down here. That's too deep of a run, right? We don't want to see these super deep retracements. This is on, like, hourly, pretty much. Yeah, hourly and 30-minute. And what this is talking about is these invalidation levels on the 30-minute hourly, really specifically, are what is going to form the low of 4-hour candles. So let's say this is a London reversal. Price expands away. So it's creating a level for invalidation because this has to hold for this to be a London reversal, right? So the hourly time frame or the 30-minute will retest these levels, which are going to create the low of 4-hour candles, right? So that's ideally what we want to see, right? And now what we see here is once we create a swing point away from that level, like I said, your invalidation totally moves away from not the key level, it's from the swing point now, right? Where we mark out EQ of the candles in the swing point. So then it goes to the lower time frame. This is what it looked like altogether, where previous candle is an expansion candle. Look around the opening price on the 1 hour or 4 hour. Here's a fair value gap. Let's say Asia session hits the low, like the invalidation point, but doesn't reverse. This is what I mean by like, this is a key level to reverse from now. Because if it's an Asia low, it's a swing point or whatever, that's ideal. Like I want the low today to be reversed from a swing point, to be honest. Like manipulation, because that's my ideal GXT profile, right? So let's say it creates a swing point in that gap. It doesn't reverse. You require this to be the manipulation, right? Once price starts to expand away from the swing point, right, that creates a low day, then this is your new invalidation level. Yep, this would be where London is. Yep. And then you can start to look for entries here, but what if price starts to expand away from the low day? It's simply just going to create new invalidations level, right, where price should continue to support expansion. In expansion, we want fair value gaps and opposing candles to support price. And all we're doing is trading 4-hour expansion candles away from the low day. So as price is expanding away from the low day, it's creating those key levels on the 30-minute or hourly time frame, right, to actually form the low of 6 a.m., 10 a.m., etc., right, that are just expanding away from the low day. Does that make sense? Yep. But yeah, this part here, where was it? Yeah, this part here, these are swing points on the hourly and 30-minute, essentially, right? We're like, because that's what for continuation especially, or even like you know, it's actually going to be, here it's going to, let me actually explain this. So let's say you're trading the protraction phase of the daily candle. So it's opening low first, right? Where we want to trade a bullish candle. When we hit like an hourly or 4-hour key level, this can form like a 1-hour swing point or a 30-minute swing point. And then if it fails to actually expand away, this is when we require that manipulation on the 1 hour, 30-minute within that 4-hour or 1-hour key level or whatever. And once that expands away, this is going to create like a 30-minute or 1-hour key level. Because remember, if we're going to trade a 1 hour or 30-minute swing point like GXT, we need a 1 hour or 30-minute key level. So like this has to be a 30-minute CSD at least. So let's say you get another swing point, you can trade that. Boom, we start to expand away. Now we're basically trading just about at the daily open. This is where you want to be involved ideally, but obviously like it's fine if you get involved like even up here. This is the most important part. As long as they're drawing liquidity, like really, like as long as they're drawing liquidity, that's fine. Let's say there's a fair value gap here. Let's say we trade into it, but we don't reverse. Maybe we just consolidate. Well, this gap becomes what needs to be manipulated, right? So something like that. Now, if we fail to manipulate this, Now we're just like in retracement essentially, right? Which is not ideal for this to hold, right? Then we would be looking for more like EQ or something like that. And at this point, invalidations also come down to like wick size on 4-hour candles. So there's like a couple ways we can set invalidations. This is one of them as far as like key levels go, or just for continuation and stuff. But it's also just the wick size of like 4-hour candles, right? So that's pretty important. Now, what if price does this? What if it doesn't even really form a low of day? Because this does happen like in Asia. Maybe price just does this, doesn't hit really a key level or anything. And you open New York session like in the middle of no man's land. But there's a couple things that need to be required. So we need to have a key level, or sorry, a objective for price to continue expansion from. And you're going to open up within a 4-hour or 1-hour candle, right? So let's say you're opening up 10 a.m. Well, you're going to look around that opening price, right, of that candle, which goes back to really just this, right? It's really this. You're just looking at back within the 6 a.m. candle. Like, is there a key level within there? Are we within a fractal model? If we're not within a fractal model, then you need a 1-hour or 30-minute key level for the low to be formed from, right? So let's say there's like a 30-minute fair value gap here, and 10 a.m. is right here. Well, you simply require that small opposing run and a swing point to form here, to form the low of 10 a.m., and you could expand, right? So it's really just about key levels. So if this is the low of day, right, it's going to form like fair value gaps, right? Ideally close to these candle opens. So like 10 a.m., like this has to hold pretty much for 10 a.m. to be an expansion candle. Because if it doesn't hold, then we're cutting too large of a wick. So it's really just about like moving the goalposts. So like maybe the daily opens here. Maybe there's like some swing points below the daily open. Well, ideally we go manipulate those because we don't want to trade away from them. As soon as we create this CSD, this has to hold for continuation. What if we don't even retest it? That's fine. We get this fair value gap. 6 a.m. opens here. Well, this has to hold for me to trade 6 a.m., right? And then once we form that swing point, that's when I can go to the 5-minute, the 3-minute, if it's a 30-minute, 1-hour swing point, right? So it's really just about moving the goalposts. And I'll show you an example right here on NQ that I traded. I think a lot of us traded this. There's actually like 2 examples really. So like this one, for example. This was Tuesday right here. Yeah, this was a pretty good week. This is when the previous day manipulated this low. So as soon as we hit a key level, like this is when we start to look at phases of price, right? So any time we hit a key level, so on the higher time frame or even on the 1-hour chart, right, to form the low of day, this is where we start to pay attention to phases of price, right? Because we need to see this. We need to see some sort of reversal signature, ideally, right? So as you see, expansion with expansion is like the best signature for reversal. And as often you see a swing point, but here we don't really have a swing point on the daily. But what we see here, if you go on like ES, you can see there's a CSD or whatnot. So we have that CSD, right? And this is when we don't really have a protraction phase of the daily candle. So this is when we're not entering the wick. So you see the difference? We're entering in expansion. So if we're entering expansion, yeah, we're already in the body. That's fine because we still have a draw on liquidity, which is really Monday's high, right, or Sunday's high. There's no established high of the week. It's just like 1800. So as long as we have a draw on liquidity, that's fine, right? Because price is not likely to inside bar. You see, it's just inside the previous low, the previous high. This is when around drivers we can confirm narrative, right? So what we see here though is important is expansion with expansion, right? How is this expansion? Where we're seeing opposing, or not opposing, but PDR is holding, right? Shallow retracements. Now this is when I want to take your attention to here, right? So check this out. So in London session, we hit this fair value gap, right? Now if this is going to hold this fair value gap, we want to see this swing point expand away, but what happens? We just kind of consolidate, as you see. So what do we require? This to be manipulated in this gap, right? Because if this doesn't hold, then likely, if we don't manipulate this low, likely going to take out this low, right? So if this gap is going to hold, or this little range here, this low needs to be manipulated, right? So this goes back to this slide, where Yep. So it's this right here, right? So I need it to manipulate this low, right? So as soon as we create a swing point from this low, then I can look for trades again. So what phase of price is this, by the way? It's just expansion, consolidation, now potential manipulation if you get a swing point here. So boom, we get a swing point, and we also have the CSD. Yep. So check this out. So our first invalidation for us to like expand away from the low of the previous day was like, it's this CSD or this fair value gap. Like this has to hold, right? If this is going to be a true reversal. Now, when we start to expand away from that, if this is going to be the low of day, what has to hold? This fair value gap, which does hold. Now, you can't trade away from this level because why? We don't have a swing point away from it. So this is how you avoid like trading consolidation. Yeah, it expands. We don't have to manipulate in order for price to expand, but this is how you anticipate price to expand away from consolidation because you could have easily got caught or something right here. So like you would require this to be manipulated because we don't have a candle 3 here, right? So if you don't have a candle 3, you can't trade candle 4. So like you would require this to be manipulated or like an SMT at this low, but I don't even know if that happens. Like probably not. I don't think so. Yeah, I don't think so. That's fine. So when price expands away from that, it creates another key level, right? So you see how we're just moving the key levels. Like it's this one, and then it's this one, and then it's this one. Now we can't reverse from this key level, so it creates a key level within the gap, which has to hold, right? So now this is just about, we have a key level for continuation. The daily supports this key level from, this manipulation to our highs over here, all the way up here. Right, so as long as we have the daily candle supporting some sort of model for either continuation or reversal. So this is continuation, it's not reversal because we're not entering in the wick, right? If we're entering the wick, like say open low first, that's what I mean by it's supporting the model or the reversal. Like maybe there's a fair value gap here. The fact that it's opening low and creating a small wick, that would be it supporting it. But if price is already an expansion candle, it's already supporting it. Does that make sense? Yeah. Now we're just trading, 4-hour expansion candles. So you see this small wick here, that's fine. And now we're concerned about drivers, right? So if I go over here, what do we want to see at 8:30? I think there's 8:30 news. Yeah. There's no news. So there's 9:30 though. We want to see the driver expand away from this low, right? And this is a protected or a relevant swing, right? When you look at the space between this low and this low, they're spaced out, right? So this is where we already anticipate price to reverse from, because if you fail to reverse from here, you're gonna go here, right? Like, especially with this. Go ahead. Yep, exactly. Like when I have an hourly CSD and like a protected swing or some sort of manipulation prior to a driver, then it's like we haven't even hit anything relevant, right? Look at all these failure swings up here. It's like the driver should just expand, which is pretty much what it does. And I traded this here as well, and it just expands, right? We're already in a 4-hour expansion candle as well, right? So every single candle is already aligned bullish, and that's when you get the highest probable trades, right? And when you look at this 4-hour candle as well, it also opens low first. So that's great to see as well, right? It opens low into this level, starts to expand away. And yeah, once the driver starts to expand away, so here is 9:30 right here. I think NQ is a bit cleaner. Yeah, it takes out this low. Only with drivers, right? If there's no 8:30 red folder news, then it's not relevant. It's not relevant because there's no driver. But I meant to say 9:30, by the way. If I said 8:30, yeah. But here's 9:30 every single day on indices specifically, and only indices. When you have a low that you want to trade away from, it can make an opposing run to the draw on liquidity, which is higher. But once you see a price close through, that's how you pair it with continuation, right? So if you look here, what do we have? We have that hourly chain of state delivery, right? This right here prior to the driver is not relevant, right? Because we want to see the driver confirm narrative, which is when it starts to expand away from this low, right? So that's exactly what we see here. And that's how you pair it with, a driver with your entry. I think a lot of people took that. So that's just an example of really just this. It's just, this right here, but it's also just this here as well, right? When the low of the day is created, which is in Asia, it's like super early on in the candle. If price is going to continue, these key levels need to hold, and these are what we're really concerned with, right? Before the 6 a.m. candle opens, like I already know what key level I want to trade away from. It's this. You know what I'm saying? So like this is how you know like what key level you want to trade away from, right? I don't really care about this being traded away from, right? I don't care about this. Like this needs to hold if I'm going to trade a 6 a.m. candle, because this is the only level that would create a small wick, right? If you go way down here, it's creating too large a wick. So that's really how I set invalidations for the day, right? And there's a bunch of ways you can do this. So this reminds me of let's go over like this one right here. Let's say like before you come into session or whatever, price hits a key level, right? So check this out here. And it's really the same thing where there's like SMT at these highs, if I remember. I think ES takes out the high, pre-stays high. Yeah, pre-stays high SMT. It's a 2-stage SMT, which is something we're gonna go over soon. But there's a SMT here, right? And price expands away. High of days Asia. So where do we set our invalidation levels when we hop on the charts? Well, if we're gonna continue away from the high of day, well, we don't want to see super deep retracements, right? If this is the reversal point, this is the retracement point. I don't want to see price come way up here. That would not be an expansion, right? Signature. We need to see these shallow retracements. Like this needs a hold essentially. This little range right here. So when we hit this key level, like this is where I want to see price expand away from, right? But the fact that you're gonna see this right here, the fact that we don't expand away from it, now I can't trade away from this fair value gap anymore. It becomes this high. So it's literally this again, pretty much. It's this right here. Right, so I already know if I want to be bearish, this needs to be manipulated because I don't trade away from consolidation, right? This is a consolidation where price just stays in between this candle's range. It's also just after expansion, right? We're getting that new phase of like retracement or consolidation. Whenever I want to trade away from a consolidation or retracement, I require manipulation, and this is perfect, right? Because whenever you come into a day or before a driver, so this is CPI, I think. I'm pretty sure. CPI here, Thursday. Yep, CPI. So what do we see prior to CPI? That there's nothing to trade away from on either side, right? Of this little range that we're in. I can't trade it from here, and I can't trade it from here. Right, because there's no reversal signature. That's important, right? So how do we create a reversal signature? It's manipulation, right? So I would ideally want, if I'm bearish, I want price to, the CPI driver to manipulate this, and then so I can trade away from it, right? Because if you come into a day and there's no established high of day or low of day, then you want the driver to create it. Now, when you're in continuation and there's nothing to trade away from, then you want the driver to create it. So that's what we're in here right now. So let's see what happens. As you see, YM takes out this high, right? So that is a driver manipulation, right? So 8 o'clock candle here is manipulating, right? So if I go back to like NQ or YM, now we don't care about this fair value gap anymore. We don't really care about this. We already have the reverse signature from here. So now what's required? We need to expand away from the key level, which is this manipulation, right? So this is when we look within this candle and set a new invalidation point, which is clearly this opposing candle, right?
Since you saw YM, the manipulation, then you're looking for the entries on NQ or ES?
Yeah, they're just weaker, essentially. Now, how do you confirm? We're gonna get into like some two-stage stuff here, but it's literally right here. So you see that NQ and YM, NQ and ES create a lower low here. Now, you can already like start to enter here to pair your entry with 930, because if we manipulate prior to 930, then we should expand at 930, right? Or you could wait a little bit. So this is what I did. This is quite the large range, as you see. This is a huge CSD, right? It's very large. So this is when we get this prior to 9 o'clock or 9:30. It's we have this clear set of opposing candles, right? At 9:25, with already within the previous candle already manipulated. This is key, right? whenever you want to position yourself before an entry, you need to manipulate first, right? So that's what we have here. Now we have a smaller range, I guess, refinement away from this level. You have a small wick here. You have all these equal lows, right? And now this is where we get a two-stage SMT, where previously we were weaker, but now we are stronger right here. And that's just for YM to catch up. So you see here, we put a lower low here, where previously we were putting a higher high here. So that confirms this SMT here, right? So this is when I set my limit right here. Before 9:30, you can already anticipate price expanding, right? I took this on a couple accounts. Like one was Apex. So with Apex, I have to trade like very small RR. But with I post this on like Twitter or whatever. Me holding this to like all the way to like EQ of this higher time frame range here. And that's because we failed to manipulate this low. If you look here, if you fail to manipulate this low, and look at the space between this low and this low, right? It should melt, right? So like the next target, which would really just be EQ this range, because this is unrealistic. Price not going to get here in the same day. It's really far away. So that's when I held. Yeah, you probably did. A lot of people did take this. Very good trade right here, right? And it's like the if-then scenario. Like even if we're going to be bullish right here, because we do open low first, right? Well, there's a couple things that need to happen, right? You can't trade away from this low, right? So you can't do that because it's just consolidation, right? So the thing is, what you would require is like the driver, like 8:30 to manipulate this low first, ideally, and then 9:30 to expand away. That would be really nice to happen if you're bullish. But the fact that we manipulate high first, and now we're having like two-stage SMTs, right? Or just SMTs that are just supporting within distribution, right? Which is really good to see. So and then all the assets sweep this low out. No SMTs formed at this low, which is another red flag. Like you always want SMT, ideally. That's a really good filter for price. It's not only like the GXT model. It's a really good filter in price where we're requiring the daily candle to support our model or whatever. That's really good. You know, trading expansion candles away from the low of day, but it's also requiring SMT with these reversal points. So where are we at here? Where's the models at? Like here, for example. So within continuation, at least, you can have fair value gap SMT. So like one asset hits the fair value gap. That's something I saw in CL like yesterday. It's just fair value gap SMT, which is just a lower time frame swing low if you really think about it. But really, this is the best when, like I said, you're framing reversals from highs and lows. It's my favorite. To form a low of day, high of day. It's where you'd have SMT here with its external range point. So if you're going to go from internal to external, external to internal, ideally you have SMT with the hourly or 4-hour range high or key level here to form the high and low of day, or something like this with SMT down here, right? And then that's already one filter, and then there's another filter for actually filtering SMT. So it's like a lot of, yeah, it's crazy. So we can get into that right now. We'll probably get into like a couple examples. So that was this example. That makes sense. It's just continuation. So like I said, there's only two ways we're going to trade. It's either let's say you want to frame a bearish trade. It's either when we're trading the open high into a key level, and we're trading the swing points away from that. This is ideal, to be honest. Or there's this scenario where you open up the charts and there's already a high of day established, right? And how do we confirm this being the high of day? It's when the drivers expand away, right? And whenever you're trading, within a expansion candle, you're in the expansion, you want to be trading away from the high of day, of course, but price is really far away from the high of day. So this is when we acquire a more closer proximity reversal point, right, to trade away from. So that can be a key level, like a fair value gap on the 30-minute hourly, or ideally in an internal manipulation. So internal being from this low to this high, for like the high of day to the low of day, like the current high of day, low of day. Internally to that, we have an internal manipulation like this. Like that's best because now you're trading for a protected swing within distribution, right? So this is what this is right here. This is what this is. That's always ideal, but this doesn't have to be the case. It could be a fair value gap too, right? But yeah, like you want to be trading away from some, close proximity level. And all this is a model, right? It's just order pairing range of the high to the low. And then we can obviously hold runners after this gets engaged to like, stuff down here, right? Yeah, exactly. Um, so there's another day right here, right, where the daily candle's opening high first. You see that? It's opening high first. And the high of days form from SMT. So we're pairing these models with two things. It's drivers and SMT, right? So in this case, it's an SMT. Now, this is not a driver because the driver is the one that actually, traded into this high, right? And then 10 a.m. is the one that reversed it. So here's the 9 o'clock candle. As you see, it trades into it. And then it closes, and then you get a 10 a.m. reversal. This is always the ideal scenario for a 10 a.m. reversal. Because ideally, I don't want to see a 10 a.m. reversal because that means the drivers failed to manipulate. It fails to reverse the day, right? Now, this is different, though, when the drivers are trading to a key level. That's way different. But let's say previously to the driver, so before the driver, we hit this key level. If the drivers fail to reverse, that is a red flag. So do you see the difference there? Yeah, no problem. So there's a key difference for 10 a.m. reversal, right? Because 10 a.m. reversal, I ideally don't want to see because that would mean that the drivers, so like 8:30, if there's red folder news, or like 9:30, they failed to reverse. Ideally, I want to see a 6 a.m. New York reversal because that means I can pair the reversal with the driver, which just makes it higher probability, or a continuation with the driver, right? So it's like if the driver fails to reverse, that tells you a lot of things, right? Because if we have a key level that we want to form the high and low of the day from, we want price to trade away from that at the drivers, like at a key time. So that's not ideal. That's not ideal for a 10 a.m. reversal. Now, this is totally different, though. This is the key level to form the high of day, right? There's nothing here, right, internally to this high and this low or whatever. Just a bunch of chop or whatever. This is the external range high, right? When you think about protected swings, look at the 4 hour. This high is very relevant, right? There's really nothing else, right? So it's like you want price to reverse here, ideally. It's just the previous high. So this is when the driver is expanding towards the draw on liquidity. It's totally different. So this is 9 o'clock candle right here. So it's kind of like pairing it with a driver in a sense because, previously we didn't trade it into anything. It's just the driver going to that reversal point, and then 10 a.m. reverses. So it's a bit different. And this is the 10 a.m. reversal that we like to see. And then we have this SMT here, right? This is when we get the GXT model, right? Where 6 a.m. hits this high, doesn't reverse, so we reverse off of the 6 a.m. high. We have that small wick, 10 a.m. And then the high of 10 a.m. is formed from the fractal model, right? And then we can trade simply the fractal model here. And then you see how the daily candle is supporting it, though? The daily open is like right, let's go find it. It's right here. So you see how it's opening high first? Now, what do we notice about this candle, though? Very large wick. So we can still trade it. We just have to adjust our targets, right? Because we know that price is not likely to expand all the way down here. So like you can just target the current day's low, which is right here. That's a really good target. Gives you enough R. And then maybe you can hold runners, but this is our main focus. It's just targeting basically at the daily open because with the large wick, we know that doesn't support expansion. So therefore, it doesn't support expansion away or past the daily open, right? So that there's, yeah, exactly. Here's another day that I traded right here. And this is what I mean by narrative, like with drivers. Like, so as you see here, the high of day is created in London or Asia. Now, what did we mention when we trade away from the high and low of the day? It's going to create new key levels. So this essentially. So this is a fair value gap. This is what we're seeing over here. You get a fair value gap on the hourly or 30-minute time frame for continuation. Now, this is an NFP day, so a very heavy news event. So it's like you got to set the if-then scenario, right? If we're gonna, maybe reverse all the way up here, we are coming off of a pretty large expansion. Then what would be the time for price to expand? Drivers, right? You'd want to see the drivers expand away from this little candle too, right, on the hourly. So here's the 8 o'clock candle. It should expand away, like heavy, right? But what does it not do? It doesn't do that, right? It doesn't actually expand. It does like a little bit, but look on the lower time frame, it's very shitty. Like this is not obviously like anything that's relevant, right? Yeah, it's just like chop, right? So it's like that's already telling me one thing right there. It's like, okay, the driver could not reverse from this low and expand higher. So it's like, okay, I'm probably just going to either expect two things. I'm either going to expect price to be choppy for the rest of the day, or price to be bearish. Like it shouldn't be bullish if the driver's not going to reverse. So here's 930. You see what it does? It puts in this swing point. So again, once we have this this key level that should support expansion, right? Once we get a swing point from it, now we're moving the goalpost right to something like this. We get our key level or our swing point, and now we're more concerned with pairing that with the 4-hour candle and seeking invalidation in this swing point, not really the fair value gap. This is our validation right here. So now we go to lower time frame, and this gets a little ugly, but you have a CST here. Here's 930 right here, and you have an SMT here with this high, or we create it. I think we already created it. Right there, we create it. Right, so you see that SMT there? And then price expands away. Now this is only 3 minutes, a lot cleaner. This is what I traded right here. So 10 a.m. opens right here and then creates that CSD, right? So this swing point here is what actually creates the SMT on this asset, as you see. And I there's no like 30-minute model here, as you see, but there's an hourly. So I don't care about entering on the strict time frame. I'll enter on the 5-minute or the 3-minute. It doesn't really matter to me. Here is just an hourly 3-minute. It's the same thing to me, honestly. It's really about the narrative. It's the fact that the drivers couldn't reverse higher, and now we're just pairing a continuation with 930. So you see 930 reverse, right? So previous to 930, we didn't really have a reversal from a key level. So what do we want the driver to do? Create it. So exactly what it does. Now I'm going to teach you something else that we pair with key levels. I don't know if you've ever heard of this. Have you ever heard of a PSP? Okay, cool. It stands for precision swing point, right? And I'm not going to teach this. I'm not going to teach this in Lens because it's not my concept. It's actually a quarterly theory concept that my friend taught me, and it's very simple. Yeah, it's very simple. It's when one asset, a correlate asset, creates a like a bullish candle. In this case, it's bearish. Now go to the correlate asset. It's a bullish candle. You see that? So this is bullish. Over here, it's bearish. That is a Kraken correlation. So what we can frame this with is with a multitude of time frames. For one, it's the 30-minute or the hourly, just at key levels, right? So it just like it's like the fractal on crack because it's like a Kraken correlation. It's really good. So that's that, and then we can also use it on the 4-hour time frame as well, and the daily, right? So there's really a couple of time frames we're going to use it on. It's the 4-hour, the daily, the 1 hour, and the 30-minute. Okay, because that's what we actually frame narrative with. Now I know there's one this week. I know there's one here. So check this out here. So here it's a bearish close. Over here it's bullish, and that forms the high of day, right? So this is why I was bearish this day. Not the only reason, but there's also a 2-stage SMT here, which you're also going to get in. So this is what I mean by there's like different types of Kraken correlations. And this Kraken correlation is literally confirmed narrative because at I'm not even joking, like every single reversal, there is these types of Kraken correlations basically. So it's very, very powerful. So when you don't see that, that's like a filter in itself. It's like, okay, I won't trade it, right? Now it's not every time, but you're gonna see an SMT. Like look at today, there's an SMT. What forms a low of day today? I wonder. PSP. What? Bullish candle? Bearish candle. You see that? So literally, it's fucking crazy. And when you get you can confirm SMTs with them too. This is the best possible scenario. It's where you get an SMT. Well, I'll try to draw that a little bit better. Hold on. An SMT at a key level or something, and you get that PSP there, right? So like this asset will be like, let's say bearish. This asset will be bullish or whatever. Sorry, that was like horribly drawn. Whatever, something like that, where it's just one creating a higher high, one creating low low, and then you see a PSP because that is a 2-stage Kraken correlation in itself. The SMT in itself is already a Kraken correlation, but then you get that PSP, which is a Kraken correlation. You can't like pattern trade it obviously, but look at today on CL. You're gonna see the same thing. So you see this low here is a PSP. Over here, it's bullish. Now, I don't think this is a good trade regardless, in my opinion. Just because of this, like if you look here, I don't like this sweep here, honestly. I think it's like a failure swing. Now, it worked out. I just didn't like it personally. I will show you this though. Where was it? Maybe it was the hourly time frame yesterday. No. Let me try to find it. Hold on. Actually, I think it. Yep. It's just one asset closing bearish, the other asset closing bullish. It's pretty simple. I think this was a PSP. Yeah. So check this out. So I actually took a loss this day, but then I took a win. So if you look here, we have a bearish expansion range. I think I got blinded by this two-stage SMT. So this creates a lower low. This asset creates a higher high. I think later on in the day we create a. Let me see. Yeah. We have this. So this is what I was counting as a two-stage SMT. So you see how it goes from bearish to bullish. Now, does it create a decent move? Yeah. I was looking for this to be the draw. So I can't talk. Oh my God. Let me see if there's anything else there. Yeah. So I was trading up here. And I took a loss up here. And then I flipped my bias at 10 a.m. at the 10 a.m. open because of this. So check this out. You see, where is it? Yeah, like this high right here, this fair value gap. So remember I told you that fair value gap is going to be SMT as well. This is what we see right here. So what do we see on the weaker asset? It's closing bullish, right? Shouldn't it close bearish if it's the weaker asset? What do we see on the so-called stronger asset? It closes bearish, damn near, basically. Now I think this one closes bearish, or almost does. But you see the difference in the closes? Like that's important in itself. I think there's an hourly PSP here though, anyways. Yeah, there is. So check this out. It can even be like a small, like even like this. It can even be like the tiniest bullish close. It doesn't matter. See how this is bearish? So what this is telling you is the strength is switching from the stronger asset to the weaker asset. That's like a two-stage Kraken correlation in a sense. This is why I traded, right, into these failure swings here. So I assumed that this SMT was just going to break because we had it at the lows here, right? But now it negates it, right? Because now we have SMT highs. A little confusing day, but it's just GXC, right? Where CL goes and takes out this low. Wait, was it this day? Am I tripping? Oh yeah, it was this day. I was like, what the fuck? Yeah, we just took out these lows here. Was that? Yeah. You just gotta it's not too hard. Just as soon as the 4 hour closes, like go and check the assets and see if there's a different type of close or anything, or the 1 hour close. Go and check the. Yeah, it's like, yeah. Oh no. We're only using this on like the daily, the 4 hour, the 1 hour, and yeah, that's really it. So if you look at the high of last week, for example, on like indices here. We have this, where was it again? Yeah, okay. So I will also tell you that SMT with previous day's highs and lows and previous week's highs and lows are the highest probable SMTs, okay? So this is where we have the previous day high SMT that gets swept here. So see if it's a bearish close? It's the asset that sweeps, so it's like this asset should close bullish because it's the strongest. Well, this is where you see NQ close bullish, so it's like a two-stage Kraken correlation. And this is why I was short-term bearish. I didn't think it was going to go all the way down here, which it basically does. But when you see price actually like start to expand away from that, then it's like, okay, then we can go here. If we fail to manipulate this low, we're going to go here. Right? So now it's just phase the price away from this sort of internal manipulation, which you can't know that this is some sort of reversal that's significant if you don't know this, right? So like, you see me trade almost every day. It's because of like stuff like this. Like at every single reversal, something like this is here. Like this type of SMT stuff that's like advanced. And this is how you confirm narrative and whatnot. So if you look at, what day was it? Let's just find like another one. I think this one. I'm trying to think. Oh yeah, today had it. Oh yeah, right here, right here. So even like this higher time from retracement. So any higher time from retracement, there's going to be some sort of two-stage cracking correlation. So check this out here. NQ or ES takes out. So let's go back here. Let's just go over here to minis. Previous week's high. Where's the previous week's high? It's right here. I think ES takes it out. Yeah. So ES takes out this previous week's high, right? And we don't have an established low of the day. It's just a gap. So it's like ideally we want to trade back this gap. Now I don't care about this SMT here. There's like an SMT with YM or something like that. So see how there's no SMT here, but if you go on NQ, or sorry, there's no sweep here, but on NQ there is. There's a certain SMTs that are actually significant, and we'll get into that later. But this is not an SMT that's significant. This is a SMT that really makes sense. So check this out. At what time? At 10 o'clock. 10 o'clock. Yeah, 10 o'clock. We hit this high up here, right? Which is significant because it's the previous week's high. It forms a divergence now. This is when we get a two-stage cracking correlation, right? Which is something we're going to go into in a minute. But you see how this asset creates a higher high in Q? We don't take out this high, right? So it's like, how do you know if this is going to hold? Because this easily could be the lagging asset and go take out this high. It easily could have done that. But the fact that we see a two-stage SMT shows you that it's a true reversal, right? So it's going to, you're going to see that right here. Where when we hit this high, we're starting to create lower lows on the stronger assets. So you have to see it like this almost. It's like you have this higher time frame SMT, which is creating higher high. Immediately after, we're creating a lower low, which is something that I'll probably share with you guys. Which is right here, two-stage SMT. This is literally what we're seeing. Right, it's like a high rate time. It's like a large range SMT followed by a small range SMT. It's like a SMT that confirms the SMT almost. And so like logically, that's hot and lens. This doesn't make any sense, right? Like this freaking BS. Like because ideally, like we don't want to trade away from this failure swing. This is why you have to understand that this is just a higher time from retracement. It's just a short-term move against the drawn liquidity, which is higher. This is like clearly the drawn liquidity rate, especially after this relevant low being manipulated. Clearly drawn liquidity, but it doesn't mean we can't have bearish days or bearish moves against that. That can't be like higher probability, right? If you know this two-stage, if you just demand this like two-stage crowd correlation stuff, then there's opportunities every day. It's insane. Yeah, like this is a fire move, right? I took this on YM here, and you're gonna see why. So you see this candle here? It's bearish. What about over here? Bullish. That in itself is, yeah, I'm telling you, it's fucking crazy. So it's like I'm seeing that, I'm like, okay, that's great. But how do I get involved with this asset here? And how do I know that even this is gonna expand away? We'll go to RTY. Yeah. So check this out. This is the 10 a.m. close on like NQ, ES, and YM, which is what is GXT, right? It's just the high of 10 a.m. created from a reversal candle. Now, how do we know that YM will also CSD? Because it only had this SMT, but it didn't CSD yet. How do you know? Well, it's this strength switching, right? This is a PSP in itself, but it's also a form of strength switching. When I go to RTY, this is the weakest asset in the triad. So like it doesn't matter what you execute on, but for me to enter this, it's like kind of a large stop loss. But you see how this candle is bullish on the weakest asset. So this is clearly the weakest asset when you compare it to YM. You see that? But now it's switching strength. Do you see how this is a bearish candle? Right. So now it's showing weakness. This asset's showing a little bit of strength. So all that means is that YM will catch up to RTY. Right. It will. And that is what also confirms this. So this is literally my entry, like dead ass, like on the close of this from here, anticipating this actual fucking CSD. Like I don't have to wait for it necessarily. And a lot of people are asking me like, how did you know? It's like, well, I haven't really taught that. It's like, it's kind of hard to explain. I also wanted to take this asset because it had all this low resistance and it has yet to fill this.
That is like a little more advanced.
Yeah, it is. It had no wick on the daily candle, so I was like, okay, yeah, this is definitely going to go. And I think this is the only asset that actually took out this low. And then look at this shit. The same logic, right? If this is going to be the high of the day, what is it going to form? What do we want to see at key levels? We want to see 30-minute or hourly key levels, right, to support continuation. So what do we get here? A fair value on the hourly time frame. We want to see a swing point expand away from those key levels because we haven't taken out the draw yet, which is right here. Now look at this candle here. Bearish. Go to ES. Bullish. Go to NQ. Bullish. Yeah, it's there too, right? So, and this is GXT on the 1400 candle. So you could have traded this as well. So it's like previously to the 1400 candle, we have this PSP. So you can use it at key levels. You can use it at SMTs. Like, we had the SMT at the previous week's high. And then we got the PSP and then the two-stage. So it's like a bunch of Kraken correlations. I'm telling you, Kraken correlations is like the best concept ever. Like, it's the best. There's no better confirmation than SMT. So like, if you just demand this type of stuff, you will do great. Now, what about this here? So what about this day? There's these little subtle things to pay attention to as well. So you see how we close below this on YM, this low? Go on ES, we don't, right? On NQ, we don't. Or maybe you do. But on ES, we don't, right? So that's a type of Kraken correlation itself, but what do you want to see on the weaker asset, ideally? You want to see this asset catch up, right, to like ES and NQ. So if you just look at the distribution within this day, it's a little bit stronger, right? We can tell by price not closing below this swing low, right? On ES, it closes below. So you see that the strength is switching slightly, right? So assets can become correlated, right? This is a good sign. This is what you want to see at true reversals. So it's even little shit like that it is very powerful to actually know that, we can trade YM, right? Because even though it's the weakest asset or something, we can still trade it because it's going to catch up. Does that make sense? Now, there's a lot of things to go over, but well, I didn't come with it. I didn't come up with this actually. My friend taught me this kind of stuff. So, and I just incorporated it with like my model, and it's already with swing points. So it's like, damn, like this is gonna be, it's like good, right? When you incorporate, no, I don't know him now. I never really watched his videos either, but yeah, I mean that stuff is good. They're like really good at SMTs, and obviously we know how good SMT is. And then just like strengthening this is something I did find on myself, which is something I believe they use as well, like quarterly theory they know of or something. But this is something I kept noticing. I kept noticing one asset would manipulate and then switch strength. And I was like, that's like a good thing to see, which is what we're going to go over here. Let's just go over these SMT slides first. But as far as like framing the trade, are you good? Are you good with that? Did I cover like a little bit of that already? Or do you need to go over that more? Yeah, like with the daily candle, the low of the day formed from a model, etc. Like GXT, like you're good with all that. Like as far as just framework. And I hope this helps. Okay. Yeah. I hope this helped as well, like refining your invalidation levels. Yep. And then what I'm going to teach you here, so drivers, are you good with drivers? You understand drivers? Okay, so let's go over that real quick. So, a reversal or like a high of day and low of day, if it's put in prior to a driver, or maybe you don't know, maybe price trades into a level but you're not sure. Generally, if the driver expands away from that, that's a good sign that is the high of day, and now it's just more so being concerned with trading near some close range or close proximity reversal point. Remember, because if we're trading with a high of day and price is really far away from it, we require maybe some internal manipulation, or we want to be near some like 1 hour or 30-minute key level to form continuation, essentially, right? So that's when you want to see you're either going to pair it with a manipulation, like an internal manipulation, or you just want maybe price already traded into that key level prior to the driver. You want the driver to expand away. Okay, so that's pretty simple, right? It just means like if we hit a key level prior to driver. Maybe price already reversed. When the driver starts to expand away, that's a validation, which is some examples we're going to see here. Now, what if a reversal has not been put in prior to the driver. So maybe this could be a couple things. Maybe price never hit a key level prior to the driver. Well, this is where you want the driver to go reverse the day. You want it to trade into the key level, which is an example we talked about earlier where 10 a.m. reverse, that one example. But what about price trades into a key level but doesn't print a reversal signature? Maybe it consolidates. So this exactly. We talked about pretty much this. Maybe price trades into a key level prior to driver. So maybe you get a candle 2 or a candle 3, but we just like bullshit from that key level, and then it's like you can't trade away from that at the driver. So you want the driver to go manipulate. You want it to go create that manipulation essentially, right? Which happens a lot with like session highs and lows. So this is gonna be like when, let's say the previous sessions they hit a key level or something, but they just consolidate. Like that becomes the key level. That those swing lows, those session lows become the reversal point. So you want the driver to go create that. Now, if the driver fails to reverse from a relevant level or from your invalidation level, that is an invalidation. Right? You don't want to see that because, like I said, if the day is going to be truly bearish, then it would expand at that key time, right? It would reverse at that key time. So if 8:30 manipulates, this is only red folder. Then 9:30 should continue. We see this all the time. Or if maybe 8:30 doesn't manipulate, then what do we require? So like that one example of 9:30 didn't really do, or 8:30 didn't really do anything. Where was it? It's somewhere in here. Where I think it's right here on ES or NQ. It's right here. Where like 8:30 is in a key level, right here. 8:30. It didn't do anything. It didn't put in a reversal candle. So like 9:30 needs to do it, right? Or we would expect it to. Now, if they didn't do that, if they failed to reverse, then what would that be? That would be an invalidation of this being a continuation day because it should continue at that time. That's what this means. And yeah, if 8:30 manipulates, then 9:30 should continue. But if 9:30 manipulates, then 10 o'clock should continue. So this is simply this slide here, at least. Right? Pretty much both of these, honestly, is if you're gonna trade 9:30, if you're gonna pair your entry with it, then the 6 o'clock candle needs to be an expansion candle, right? Now, if 9:30 manipulates within the 6 o'clock candle, that means that's a 6 a.m. reversal profile. Then 10 o'clock should continue, right? Pretty simple. Now let's get into like how to actually trade it, right? How to actually trade a driver, how to actually anticipate price expanding. So this is either when the most ideal scenario, okay, is when the daily is a protraction profile and we form some sort of reversal prior to the driver, like maybe a London reversal or whatever. There's a couple of scenarios. So like we'll just say this is like continuation. So like London reversal. This is when I will actually trade a candle 2 reversal, only 1 hour and 30 minutes. It's when price makes an opposing run to the draw and closes through. Now it has to be like a bulky opposing candle. So this is just one scenario for continuation, right? And I'll show you some example of that. It's the same thing happening every single time. This is how you see AM trades take trades. He does stuff like this where it's just an opposing run to the draw and price is closing through. Now the reason why ideally it's like this, where it's below the daily open, is because if the daily has yet to even expand, right? Because it's within the wick, when will it expand? The drivers, right? Does that make sense? Now, if let's say we manipulate prior to driver, so like it's a high and low or something. This is also very ideal. So it's these two scenarios, right? Where if we already manipulated prior to the driver, like this can be a swing point, by the way. This can be candle 1, candle 2, and then candle 3 is the driver. Then the driver should just expand away, right? Because if we already manipulated, then I mean we shouldn't retrace, we shouldn't consolidate, we should expand, right? So this is very key that price hasn't expanded yet after manipulating, because then there's just only one thing to do, like I said. And when you get that confirmation of price expanding away from this, you get that CST, that's perfect, right? Even if price is opening up near a level 2, so you can wait for the driver to expand away, but you can also do something like this. Maybe the driver is opening up near, opposing candle in the 5 minute or the 3 minute. Now, this is, like I said, key that the candle that you're trading within hasn't expanded. We haven't yet expanded away from the draw. And it's like a bulky opposing. It needs to be a bulky opposing candle. It can't be like some little shit or like some consolidate. You're just gonna get railed probably. You're gonna get shit on. So like it needs to be like a clean series or a bulky opposing candle for price to expand away from. And I have some examples of this, so let's get into some examples. Kind of like positional entries and whatever. And like I said, if maybe it's not in the protraction phase because I only talked about that. If it's continuation, then there's only really one thing to really have. It's that close proximity key level. It goes back to that, right? We need to be like hitting a closer proximity key level, like prior to the driver, or maybe even a manipulation prior to the driver. Like this is internal manipulation, right? Something like that. You need to be trading away from some relevant area at that time. And ideally, we haven't expanded away from that relevant level because that's when the driver will actually do it. So hopefully that makes sense, but we'll get into a lot of examples here. Now, I just can refer to like some, like multiple days here. So there's this one. I trade this on YM. So check this out. So prior to CPI, this next candle is CPI. Have we hit a key level? No. Right? We haven't hit a key level to form the high and low day. So this is when I would anticipate this high to form the high of day because this is a protected swing, or this is like a relevant swing. Look at the space between this high and this high. This is ideally where we reverse from, right? So if you look at the 8 o'clock candle, we clearly put in some reversal. Now, what do we pair a reversal with? A couple things. We pair them with SMT and drivers, right? So that's what we're doing here. I go to ES, we take out this high, right? And if I go to NQ, we also take out the high. And YM is the weakest one, right? So obviously, I'm going to trade YM. Now, what do we notice about this candle? It opens high first, so that supports our, us to trade away from that. That supports a bearish move. Now, what it doesn't support is a large move. It doesn't support a large bearish candle. It's going to form a large body because look at the large wick, right? So what I mean by the candle profile, it's going to tell you a couple things. It's going to tell you how it's going to close and how far it's going to go, right? So this tells you how it's going to close because you open high first. We form the high of day from a model like we talked about, right? So simply, this would be order pairing ranges, all right, where the daily is opening high into some highs to manipulate on the 1 hour or 4 hour key level, and we're just expanding away from that, right? So that's what we see here, right? Opens high into a 1 hour 4 hour key level, form the high of day, and now we're pairing it with a driver and an SMT. This is always great to see. This is where you're gonna have the highest probable trades. So if this manipulated prior to the driver, then what should 930 do? So this is one driver, but this is a two-stage driver. If this manipulated prior to 930, then 930 should do what? Should expand, right? So let me play it. I think it's around 3 minutes. It's like a little bit cleaner. Yeah. So you see what 930 is opening up within. So this next candle is 930 pretty much. You see how we have this CSD? First we have that. Now this isn't like mechanically a reversal candle here, as you see, but on the close of sorry, oh yeah, I'm tripping actually. On the close of the 9 o'clock candle, so basically on the open of 930, we have this. Look what we're trading within, right? We're trading close near this 30-minute CSD, but more importantly, like this lower time frame, clear invalidation point, right? Because remember, if we want to continue bearish, what do we not want to see? We don't want to see these super deep retracements back in the range, right? So do you see this bulky series of opposing candles? I can assume that the high of 930 will form here, right? Because we haven't yet expanded away from this level, right? If I go to the hourly chart here, prior to this, the daily hasn't expanded yet. We're still inside the wick. We also haven't expanded away just from the manipulation in general. So this is when you're going to get a one-sided expansion generally, right? And that's what I entered on. See, price just forms a little wick, it makes an opposing run to draw, and then we start to expand away, right? So that's just one case. This is a very high probable trade here. And then I think this previous day, I don't remember all of this stuff. I think 10 o'clock. I think I entered 10 o'clock. Yeah, I did. I remember on the 3 minute. There's a fair value gap here. Yeah, I remember this. So check this out. The high of the day is formed in 8 o'clock. So I don't think there's a driver here. I think there's 10 o'clock driver. I don't know why I remember that, but I do. So there's a 10 o'clock. There's a 10 o'clock driver here, and also 9:30. So this is what I mean by confirming with SMT and driver. So if you look here, here's 9:30. It starts to expand away. So like maybe this is a potential entry. I'm not really sure. 9:30. Okay, no. So 9:30 opens here. So do you see why we wouldn't be entering this at 9:30? Because it's not near any opposing candles, right? You're within a swing point, but it's very far away from it. So it's like you have to wait. You ideally want to see this. Like, yeah, exactly. Like you want to see this right here. This is like super late in the candle, and I think NQ is like, yeah, it's creating some super deep ass run. So what this is creating is a some sort of manipulation that 9:30 created. So you see that? So since 9:30 created the manipulation, what do we want to see 10 o'clock do? We want to see it expand away. This is another driver. So you might as well just wait for the driver to pass here. And it creates another, I think it's just some bullshit. Like it creates another CSD, or a manipulation, sorry. Yeah, hold on, let me play it though. I think it does create one. Maybe not. But I know I entered here for a fact. Does it not create another one? Okay, I'm tripping. It was just, oh yeah, okay, it did. So this is the first SMT, and then it just reswept. That's what it was. I don't know if that was an SMT though. No, it wasn't SMT. This SMT just ended up holding at the driver. So what we see here is the 10 o'clock 4-hour candle. Previous candle, what does it do? It has this reversal candle here, right? So we can expect 10 a.m. continuation. And basically the driver's expanding away. I know there's a 30-minute fair value gap here too. Right? So I think I entered at the, I entered at candle 1 here. Like I said, I only entered candle 2. I only enter candle 2s are within drivers that, supports the narrative, right? Because if the driver expands away from some sort of SMT or whatever the high of day, that's like the highest narrative you can get, right? Because we have the high of day forming from this. So it's like you can bend the rules with good intentions. So like this is something AM would probably take. We're just trading away from the low of day, right? Or the high of day, sorry. Within expansion candles. The 4-hour candle also opens high first, and now it's expanding away. Now here's the thing, like this is really weird because this is the candle that creates the high, like mechanically, but it's like I'm not gonna enter on that really. I'll just enter here on this fair value gap. That's what I entered on personally. Because again, if we're gonna reverse from, if this is gonna be high of the candle, then what should support price lower? Fair value gaps, opposing candles. So you could have entered here as well, but I just didn't. I didn't enter it earlier. And price ultimately hit my draw, which is down here, pretty much. So it was like a short little trade. But yeah, hopefully that one makes sense. Now, I know, how about this day here? I don't think there's any SMT. No, I don't remember any of these days. I remember this day. There has to be like a PSP. Like I do it rarely. Like I do, but if you just stick to like just trading like PSP or whatever, and if that's your only form of calculation, it's fine. But ideally, there's SMT. It's like right here, there's SMT, and there's some strength switching going on here. So check this out. Yeah, it's fire. Yeah, it's really good. So look at NQ is the only asset that ran out this low, right? So there's a higher high here on ES and also YM, but it's like, how do you know it's fake? Let's go over those slides. Actually, we didn't even go over this SMT slide. So when you have an SMT, it's just when one asset creates a higher high, one asset creates a lower low. Pretty simple stuff. Now a true reversal is we're going to confirm the SMT with a swing point. Obviously, that's how we always confirm stuff. And yeah, so this is how we actually trade the SMT. We wait for a swing point, right? And it's very important that both of the assets expand, right? And we're gonna get into lagging assets here. Now, if the asset that actually sweeps, right? So this is the asset that sweeps. It creates the higher high here. If it fails to do this, it actually fails to reverse, then that means that this asset is lagging behind, and it's going to sweep out this high later on, right? So there's gonna be SMT on both sides. And the trigger for this asset to catch up is it just sweeping out a low? It's going to be S&P at the lows. Like this happens all the time. It might be confusing, but we'll get into some examples. So simply, all you're going to ask yourself is the asset that actually sweeps, right? If it doesn't actually print a reversal signature, which would be this, right? It's expanding away. Then that just simply means that this asset is the leader. This asset is lagging behind. And it's going to sweep out this high, which is this high, later on, if that makes sense. And the trigger for it to actually, this asset to catch up is ideally it switches strength like this. Whoops. Ideally it creates a higher high, but it can create a lower low. I have a bunch of examples that I can show you that I remember. Now, yeah. Now, this is an SMT that I would always avoid. This is what I was talking about with new week opening gaps. I don't like to use SMT with new week opening gaps because when one asset, fails to like hit the new week opening gap, price still has to go there. Like price, that's like a spot there price has to freaking return to. So it's not ever gonna be a true reversal necessarily. So that's what I mean by that. That's just one of the scenarios. I didn't even add that in here, but another scenario is when both assets have low resistance liquidity. One asset sweeps it, right? Fails to reverse. Then we know that obviously that this asset's gonna catch up. But also we don't even want to frame. We really don't want to frame reversals at low resistance liquidity. They generally always fail, especially when this asset is like pretty freaking close to these failure swings. And we'll go over an example of that right now. If I can even remember where this was, but it was somewhere on NQ here, or gold and whatnot. It was a while ago. I think it was like. Yeah. Trying to remember. It was like, it was over here. Yep. So check this out. So you see all these highs right here? So let me go see where gold actually took it out first. So gold took out that high first right here. But on the other assets, these are just failure swings. So check this out. This is the asset. This is the high that gold took out. But over here, it's just failure swings, right? So we don't really want to. We're not anticipating this to be an S&P that's going to hold, right? We're going over here. It's just again failure swings. So like, how do we know when it's going to catch up? Like I said, it's going to create a lower low on one of the assets. So check this out. It might look like it's going to reverse, so people are going to fall for this. They're going to be like, oh my God, candle 2 closure. I'm going to trade it. SMT. Nah, dude, it's going to fail. So what we're going to look for is the closest proximity low that pretty much created this impulse, right? And we want one of the assets to sweep it and the other asset to not. So what do we see here? That exactly where we see the weaker asset sweep out the low. This creates a divergence. So it's literally this. Literally right here. Where one asset sweeps out, and then the weaker asset that creates a lower low, it starts to expand away, but we're wanting an SMT to be the trigger for the assets to catch up, which is what we see here. Boom, right? So as you see, now they catch up, as you see. See how it caught up there? Yep, and then this is an SMT this is what we want to see, right? So I think there's SMT right here at the low, and this is another 2-stage SMT. Where there's an SMT right here, and then right here. It's a bit weird. A lot of times, like gold and silver can be a little uncorrelated. So you see how uncorrelated they are right here? Pretty uncorrelated. But here's a 2-stage SMT, right? Where you see that on Sunday, at 2000, this asset gets, it takes out this, but 2000 over here, it's like right here. It never gets taken out, right? But then we create this SMT. So this SMT ends up holding, but when are we actually going to expand away from that SMT? Right, because initially we didn't expand away. Right, as you see, it's kind of just bullshitting consolidation. There's no real displacement away, but what's the trigger for this SMT to hold? It's when these assets take out this low. Right, so see how we creating this SMT here at the lows, and now we're creating a higher high. You see how this is actually expanding away from this SMT? That's what we want to see. Do you see how the daily candle supports it as well? So the daily is opening low into it, and we're expanding away. That's another really good thing to see. And there might even be like a PSP here. No, there's not on the 4 hour. Maybe 1 hour or something. Yeah, I think so. 2100. Yeah. Oh, check this out. This is a really good example of a lagging asset. So this is something I traded on CPI, I believe. So remember I told you that previous week's high are good SMT points to see. So here's an SMT at the previous high here. Go on silver. We have that. Now, a lot of people would pattern trade this on gold and think that this is a candle 2 closure, right? From internal to external. So here you have this candle 2 closure. You have internal to external. You even have SMT at this low. You even have SMT here. Look at silver. We take out this low. So it's like people are gonna pattern trend this and like think that like gold is gonna expand, right? But it's not the case, because what do we need? What do we need the sweeping asset to do? It needs to reverse, right? Like we have here. Like both assets, have to expand away. So when you see the stronger asset here, put in a continuation signature. This is why in phases of price are important, right? Because we start to finally expand away from that SMT that was here. So after expansion and we get consolidation, so you see how we're consolidating right here? What does that tell you? That price can't reverse from consolidation, so it should continue, right? Now, what is the ideal scenario for price trading away from a consolidation? It's price manipulating. So what do we have here? Price manipulates this high, right? And also forms an SMT with that correlated asset. So this is the trigger for essentially continue. This is how you actually know that this SMT down here is just fake. It's just fake because of phases of price, right? Which is the reason why I have this here, right? If price consolidates or fails to reverse from the asset that sweeps, it just means this asset's lagging. This asset's lagging behind. Now, what do we see here though? We see this asset is bullish. I told you, like, it can be a little small ass candle. See, it's bullish. Over here, hold on, whoops. What time is this? 7 o'clock. Over here, even on euro, it's bearish, right? And on this asset, it's obviously bearish, right? So it's the weaker one. But notice how the stronger asset that creates a higher high is reversing. So not only do we have a swing point, a PSP, and an SMT there, but you see the signature of expansion, mouth expansion? That is the reversal signature that we want to see. So now we're pairing drivers. We're pairing the high of day with a couple things. It's drivers and it's SMT, right? So the way this candle forms, it just kind of consolidates within a range. So it's opening low first, but I went over this profile once with you guys. Maybe you didn't see it, but it's called a delayed protraction profile. It's when the daily, it's when the daily opens low first and then creates a new wick, right? But there's a couple things that are required for this profile. There has to be SMT, so there is SMT, and there has to be a small wick on the daily time frame. Because when it resweeps, it's just creating a new wick. So this is the high of day, now it's just creating a new wick. So that wick has to be small. So we have that. It's still fine to trade, especially with this SMT that makes it valid. And now, if this is going to be the high of day before the driver, then what should the driver do? Just expand away, right? So when we see that start to expand away, I can already assume that this is the true high of day, right? And this is when you want to enter around drivers, right? And notice something here. So at the point of this asset expanding, look at it expanding. What is the weaker asset doing? It's consolidating. Why is that? Well, let's go over that. So here's just another form of two-stage SMT. I showed you that earlier. It's essentially when one asset sweeps out and then later on it's printing in lower lows. So it's just to catch up to this asset here. This is what it looks like on the higher time frame where we have like a really large SMT. We have that smaller SMT. So that's why I showed you with that happened this week. It was this week on Wednesday, I think. It was that reversal day where I traded to the new day opening gap. This was like a two-stage SMT, right? Yeah. So that's what it looks like. And then measuring strength, right? This is important where the asset that, actually sweeps out, we want it to catch up to this asset. So we ideally want it to switch strength from the stronger asset to the weaker one. So that's when assets are highly correlated. So you can see that a couple ways. So gap size, where this asset starts to create a larger gap. With the weaker asset, it creates a lower low, creates a smaller gap. That's just one way to gauge it. Another way to gauge it is when this asset doesn't fill in a gap all the way. This asset fills in the gap all the way. There's also candle closes. Now I didn't I didn't add what we talked about, like PSP. I didn't add that, but that is another one. Okay. Now this one just talks about candle closes over a couple of things. So like it talks about candle closes below swing lows. So the same swing lows are printed on the same asset. It's when one asset closes below the low, the other one doesn't. That's after the SMT. Like all this stuff is after the SMT. This is important. Now after the SMT, this asset CSDs while the other one doesn't, or it just CSDs it later. So it's important that this asset, the one that actually sweeps, ideally is switching strength. This is all this is going over. And these are the ways you can tell. Another one is when one asset hits premium discount of its range, the other one doesn't. Or sorry, this one doesn't, but this one does. And this is the asset that actually swept. And then this is what we're going to talk about, like with this example, is once we create that SMT, right? Ideally, we switch strength, and what you're going to see on the asset that was once, weaker, it's going to switch strength momentarily, where the stronger asset is actually going to switch the weaker asset momentarily to catch up to this asset. And you're going to see that oh my God, I can't talk. When this asset expands, this asset will be like consolidating or retracing so that this asset can catch up to it. So that's what we see here. So you see how silver was the weaker asset, but you see these super deep retracements in this consolidating right here? Go on this asset, we're expanding, right? Because it's trying to catch up. Does that make sense? So that's something that's good to see. Something that's very good to see. And that's how you know that this SMT is like super fake. Like this SMT got printed a long time ago, but it's gonna break. Which people don't know that stuff, but it's not taught. You don't really learn this anywhere, to be honest. But yeah, this is just a really clean day right here, in particular. Yeah, I mean, I don't know anyone that really teaches it besides maybe like Corley theory and stuff, but their stuff is like super private. Like there's no free videos on it. Like it's all private shit. So it's really hard to learn. Another thing is when one asset hits, a key level where the other one doesn't. So a lot of times this is within higher time frame ranges. So let's say one asset hits premium discount and the other one doesn't. So mark out this premium discount here. Do you see how it's not in discount, but over here it is in discount? Now, how do you know that gold is not lagging and it will go take this low out? Well, it's when silver starts to momentarily switch the stronger asset to catch up to gold. So this is what we're going to see here. Do you see this candle here? It's very strong. Over here, it's very weak, right? That just means that silver is going to catch up. So this simply means that this, like internal to external move is actually going to play out, and we will go and take out this high. Does that make sense? So it's just switching strength because it's weaker, and then it goes to stronger, to catch up. And there's like some examples here that I took. Here's another example of SMTs that are fake. So check this out. I took all these trades too. So like this one I took. You see these failure swings? This is what I mean by like I don't care about this SMT. So if I play price here, silver already takes out this high. So it's like people are gonna think this is SMT, but it's not. And here's why. So when you think about phases of price, what do we see here? Expansion, consolidation, right? How do we leave in consolidation ideally? We have some sort of manipulation. So we see that. Once we actually trade into some relevant level, what do you want to see? A reversal signature, expansion, method expansion. That's what we have. And now later on in this day, we're starting to consolidate, right? And this is what I mean by established lows and whatnot. So here you have a fair value that could be your invalidation point, right? For the low of day to form in, but it doesn't have to hit it, right? We could form like a swing point like this to reverse from. But what do we see here? On the 1 hour, these are kind of failure swings, right? And what do we see? That there's no SMT here between these lows. So this is automatically not very ideal, right? There's no SMT, but you could still trade this, but like potentially, right? So like this could be a trade that you could even win, right? You could trade this high. But what do we know about phase of price? What do we need to see? If this is gonna be a true low of day, then we don't want to see. We want to see expansion signatures, right? So this clearly is not a expansion signature, right? We can't manipulate the high. When you think about a low of day, we need to displace like through any close proximity low, like highs or reversal points around the opening price of the day. What we do here is we manipulate these highs. So this is like a super deep retracement. So away from this expansion. So that automatically invalidates, us trading a continuation, right? And you look here, we can't even form a real swing point around relevant time. So here is like 8 o'clock or something. I think this might even be news. But you see this super deep run? So at this point, like, this is almost a what do you call it? Like even more of a low resistance run right here. So it's really like not something I would really trade away from, right? It's super deep run, and there's no SMT at the lows. So I would require, ideally, that this all gets swept out. And then what do we see here? We see an SMT, right? So this sweeps out these lows, go on this asset, forming an SMT. Now this is like super high probable, right? This is a form of consolidation, seek and destroy. We're taking out highs and the lows. It's just after expansion especially. And do you see how even the weaker asset here, this SMT, it can't reverse. You see, it's very choppy. It can't even displace away from this, manipulation here. So it's just consolidation really, where you can't displace through any internal like levels, right? This is the consolidation low, this is the consolidation high. This is like an internal manipulation to the consolidation, so it's not even that relevant to begin with. But yeah, what this is GXT, right? Where 9EM manipulates a relevant level. We have SMT. Now, look what happens at this SMT. How do you confirm this is a true SMT? Well, a reversal signature is one, so expansion with expansion, right? Phase of price. But now go to this asset over here. What's it doing? It's consolidating, right? So that is a good signature to see for this asset to catch up. So check this out. What do we see over here? Sorry, it's not loading. Right, it's just consolidating. Why? So this asset can catch up. That's all that is. It's a really good thing to see. And this is something I traded all the way into these failure swings. So if I go like the 4 hour, these failure swings here. Right, so it's just phase of price, right? Expansion, consolidation, manipulation, right? It's a gap SMT essentially, where, like I said, higher time for fair value gap, lower time from swing point. There's that hourly swing point, consolidation low, and then we manipulate it, and then the strength switches after the the SMT forms, which is again great to see. And I'll go over like a bunch more examples of this, like PSPs as well. I'll show you some examples of that. This is a good example here. So let's just go with the narrative for this day. This is what I mean by like phases of price are pretty important. So check this out, where the previous week expanded into a low. So after you expand into a low, a relevant low, what can we get? A new phase of price, right? Especially on a Monday. So I'm not expecting Monday to just expand, right? Because generally, historically, smallest range day of the week, but also especially when it's coming off of a huge expansion like the previous week. Even if we're going to continue lower, how does bearish candles form? Ideally, they open high first, right? So this is something that is very anticipatable, to be honest. Like us reversing here. Now, how does this candle form? It also opens low first. See that? So it's just super high probable now. How do we know that this is going to be, the reversal or whatever? So if you look here, this could have been the low of the day for sure. We have this manipulation. We have this CSD, right? Now, I don't know if there's any SMT though. Right, no SMT. So again, that's kind of red flag, right? But if this is going to be the low of day prior to the driver, which is 9:30, what should the driver do? It should expand away. So this is why it's pretty important to wait for the driver ideally. So as you see, that we're creating a really deep retracement, right? Which is mechanically invalidating the fractal model, right? Because if I draw an EQ of this candle's range, it's disrespecting, right? But it's important that the driver just rips through this now. Now, if the low of the day has not been put in prior to the driver, because obviously this is not the low of the day anymore, then the driver should do what? It should create the low of the day. So that's what we see here, where on this closure, we have that reversal. So 930 reversal. We're pairing a reversal with two things here, with always with the SMT, as well as a driver, right? So now we have the reversal paired with a driver here. So here's 930. So this is when we're gonna look for a couple things. We're gonna look for SMT with highs and lows, or a PSP, either one. And where's 930? So if you check this out, bearish candle, going YM, bullish candle. This, yeah, this forms the low of the day, right? So this is just GXT, where the low of the day is formed from a reversal candle. Now it's bearish, right? Over here, bullish, right? So that is a Kraken correlation itself. So it's just GXT, but on crack, essentially, because it's like Kraken correlation. So this is what I traded. And it's also like, these are kind of the relevant highs here, because when you look at these highs, look at the space between anything else relevant, there's really nothing else, right? That's close proximity. So like, I ideally want 2R to this level, because I don't know how far price is going to expand, because it's a reversal candle. You see that? Now, look at YM here. Look how close it is to these highs, right? If YM fails to manipulate these highs, then what does that mean? It can continue, which would mean that, ES and NQ can also continue, which would be a fake SMT, because you can already anticipate SMT forming here, obviously. Like YM is super close, so you know that YM is going to take out these highs. You look over here, we're not even close to these highs. So this is an SMT. Again, people are going to think that that's going to hold or something, but it's not, because look what we do. Remember what we talked about with the SMTs? The asset that sweeps out has to manipulate. But what do we get? Continuous signature, right? Mechanically defined as the opposing candles that form after we engage with the relevant swing, right? Once they get closed over, that's a continuous signature. So if this is not going to be an SMT that holds, then I can assume that NQ and ES will get to this high, right? So this is when you can enter GXT, right? Here's the low of 10 a.m. that forms, right? 10 a.m. open low, creating this fair value gap or opposing candle. I didn't enter this. It's too large of a range. I could have done this though, honestly. I could have entered off this, but I didn't. I entered a little bit later, right here. So there's like two types of intercandle CSTs in my opinion. There's one type where it opens low. The open low is a series of opposing candles. Once it gets closed over, confirms the wick. But there's also a type where prior to the opening price, the lower time frame starts to retrace. And then the candle is opening right here. And then it just expands, confirming the retracement, or like confirming the opposing candles. So like you can still assume that the low of this candle here is going to be protected by these opposing candles. So it's like the same thing essentially, or I can just assume that the wick of this 11 o'clock candle will form within these opposing candles here, right? So I just set a limit here, and it's mechanically valid to enter, right? Because obviously we have the CST now at that 11 a.m. created, but this is one of my favorite entries, is this and obviously the intercandle CST, and this is really it. I think I put my stop loss here though, but yeah, it went right there. It went to a 2R, which is a little bit past this. It actually expanded a lot more if you look, but I just took 2R here. But yeah, that's just GXT right there, and how to pair it with a driver. That confirms the narrative, but also the PSP does as well. So it's like both of those things are pretty important. Even this day here, I think had a PSP. Pretty sure. Oh, this is like some strength switching here. So check this out here. So remember I said previous highs and lows are like very high probable or whatnot. So they often form the high and low of the week when you see it. So here, the high of the week is formed from a pre-state high SMT, right? Where NQ is the one that switches, or is the one that manipulates. Now, how do we confirm an SMT? It's some sort of two-stage SMT. So check this out. This asset created the higher high, but later on in the distribution leg, creates a lower low. So this is the form of two-stage SMT, right? Which is over here. Essentially, it's something like this, right? Where it goes from the strongest to the weakest. And here, you're seeing that right here. There's the sweep at 9 o'clock, 9:30. See that? So prior to 9:30, we already had this SMT, but we haven't yet reversed from it, right? As you see, there's no reversal from it. We have this candle too or whatnot, but it hasn't expanded away. So it's like we want the driver to actually do that. So that's what we see here. I don't know if there's any PSP here. Oh, there is. Look. Oh my gosh. Crazy. So look at this. Bearish. Bullish. Yeah, it's crazy. I know some people took this. I don't know why I missed this, but oh yeah, it was like the stop loss size. It was fucking huge. Check this out. So here is 930 mixed opposing run to the draw, creates that SMT, and so like there's another SMT here. So there's the initial SMT here. This fails. It just kind of like bullshits, and then create another SMT here. It's kind of ugly, but here's the SMT right there. It's like I can only enter here, or obviously the closure, but that's way too big. That's like 50-point stop loss, so I didn't enter that trade, so I missed it. But there's just a little bit of the logic there. There also like the previous day too, so it's like every day, dude. Like it's crazy. So check this out. This is when there's a new week opening gap, right? But how do you know that this asset is not going to actually reverse this day? Because it could have, right? We could have went to this low down here, and we also could have even went to the low within this day. But how do you know that it's not going to reverse both days? Well, it's really narrative, right? Drivers and SMT and all this stuff. So look here, like this day. Like how do you know that price is not going to reverse? So this is what I mean by if price doesn't reverse at a driver, it will not reverse. So as you see, there's clearly no reversal prior to the driver. So what do you want the driver to do? This. But what does it do? It just actually continues. So that's how you know that this day here will not go fill in this gap. How do you know that this next day won't fill in this gap? Well, how does a daily candle form? And what are we opening near, by the way? So let's go ahead and set our invalidations. So obviously mark up EQ of this candle's range. But also, what are we opening near? This swing low. So it's like ideally we just manipulate this low because it's a relevant swing, right? There's really nothing else near this low. So what do we see? Asia session consolidate. And then London session takes out this low. Now what do we pair with the low of day or any reversal point? Ideally, you know, it wants to open low first. So it's opening low first. Has to be a 1 hour, 4 hour key level. It has that. But what's more important is the SMT here. So you see this SMT? There's an SMT here from the low of day. And once we start to expand away from that, what are we going to create? Invalidation points for continuation. Right, so like this CSD, this fair value gap, ideally it's fair value gap, right? Because we want to see a failure to manipulate this high to get to this high. Right, whenever you have a draw on liquidity, and then on your way to the draw on liquidity, you manipulate a high, so like something like this. Maybe there's a draw on liquidity over here, but on your way to the draw on liquidity, you have to like trade through a high. You need to see a failure to manipulate this high to get a continuation signature to this high. Make sense? So that's what we have here. We have this high here that we can target, but also on the way we have here. And remember, we have this SMT here. So ideally, this fair value gap holds to get, you know, obviously to this high. And this next candle is a driver. It's 930, and we haven't created anything to trade away from at 930. So 930 needs to create that reversal, right? So what do we see here? This asset creates the reversal from the fair value gap. So it creates that continuous signature, that reversal. Now compare assets. Look at this bullish close. Look at this bearish close. That's a PSP. And what do you also notice though? This asset was bearish. Now it's printing a bullish candle. So it's strength switching. Like this is a really good thing to see, right? I don't even know. I think there's a PSP here down here maybe with like one of the assets. Okay, no, maybe not. No, I was thinking there's a 4-hour PSP. Well, there wasn't. Doesn't have to be, but yeah. So we see that, and then what can we assume? And this is always ideal, by the way. When you see a PSP like this, and the other asset's printing a bearish candle, ideally the asset sweeps out this candle's low because that's a two-stage cracking correlation itself. This is what you see here, right? So you can already anticipate this asset sweeping out. Why? Because it's closing near the low, essentially, right? But it doesn't have to sweep out this low. But the close is a cracking correlation in itself, but so is if it sweeps out this low. Right? So that's what we see here, right? So that's a nice thing to see as well. Again, it doesn't have to happen. You can just have this PSP here. And that's why I traded to this high. It was like pretty simple. It's just GXT, right? So here is 10 a.m. So 9:30 puts in some sort of reversal. It's just for continuation. And then 10 o'clock continues. Yeah. So yeah, pair that with with your trading. It's pretty good. And then what's another example here? Oh, this day. This is a good day for drivers. So check this one out. So this is a Monday where late in the week we created this swing point. So Friday we created this swing point, as you see. And we clearly have this draw on liquidity here so that Monday could trade into. Now, what do? We mark out EQ of this candle's range, look for a 4-hour key level or a 1-hour key level. We're going to see there's really not anything here, to be honest. Like, I don't see anything here. And I don't really see anything on the hourly, to be honest, within the previous day's range. Not really much clean, honestly. So it's like this can just be when the current day creates a low. So when you're looking for reversal points to create the high and low of the day, you're only referring to the previous day's range and the current day's range. So this is a key level that's created in the current day's range, where this is a relevant swing because the space between all these lows, right? So it's like ideally we manipulate this because then we could create that small wick. Now what do we see here? You're going to see that PSP stuff. So check this out. It's a bearish candle, or it's creating a lower low. And over here we have NQ creating a higher high. But look on YM. It's a bearish candle. So you see that? It's also opening low first. So this is important because after expansion, we have some sort of expansion here, right? Now we're consolidating. How is this consolidation? You have Asia session, inside barring between the first bar of Asia. So 4-hour candles, the first 2-hour, I can't talk. The first 4-hour, damn, I can't explain this. The first 2 4-hour candles are Asia session. God, I can't talk. So you see that this is clearly a consolidation, right? After expansion. So after expansion, we consolidate. We never frame reversals off of this anyways. But how do we ideally leave a consolidation? We manipulate, so that's what we have. Once we actually hit a key level, we ideally want SMT. But here you're seeing a 2-stage calculation where it's an SMT, but it's also a PSP. So that's really high probable. Now, if we go on the 1-hour chart, this is going to get pretty interesting. We have 8:30 news and 9:30 news. So it's like, when should we expand away at those times, right? We want to see price expand away at these drivers, right? So this is 8 o'clock. As you see, there's nothing to expand away from, right? We haven't hit a key level on the 30-minute. Maybe we did. Yeah, we haven't. So what do we want to see? The driver trading to this, right? And then expand away, right? But what do we also see about this daily candle? It opens low first, right? That's good. But it hasn't yet expanded. You see it's still in the wick, basically. So that's good. That's really good. So this is what do we anticipate? A one-sided expansion, because we haven't yet really expanded within the daily range. So this is when I can trade a candle to reversal. If I see this, yes. If I see an open low and then the driver expand away, I can trade that. So this is when we see this on like 3-minute or something. I don't remember. I think it's on 3-minute. So the driver is at 8:30 right here. Right? It sweeps out this low. Now on this feed, it's equal lows, but if you go on like micros, I'm pretty sure it's sweep. Yeah, clear sweep. Right? So that's another way. If you ever see equal lows, just go on like micros or something, or another feed. If it's sweeping, you're generally good to go. So here we sweep out that low, and we have this CSD. Now I can assume that this is the low of 8 o'clock candle, right? Because it's a small wick and it hits a key level. So you see how I can trade a candle to reversal? Because I'm pairing it with the driver. The fact that the driver expanded away, that's confirmed narrative. Does that make sense? So like I can just enter on that. And then I just put my TP up here. Now I think I took a partial win on this. Yeah, I did. So I went, what do you call it? I took a partial here, and then I went break even because I'm not expecting price to come back. But look what happens. So it does come back. But check this out. Like, it sucks, right? But look at this. I re-entered a YM. So as you see, this is the previous high that gets taken out. Now, am I anticipating this to be a reversal? No, because we're creating equal highs here, or failure swings. There's also an SMT here with YM. Am I expecting that to fail? No, because of strength switching. So check this out. Very cool. So this is the SMT that we mentioned. This is the previously high SMT. But what do we notice after the SMT is created? What do we want to see if we want to continue? We want to see both assets expand away. But what do we see? This asset doesn't do that. It's actually switching strength. What does that tell you? When the weaker asset switches the bullish one, that means that this asset is just lagging, and this SMT is fake. Now, how do we know that this is a lagging asset? Well, look at the difference in retracement size. So you see how it's shallow? Look at NQ. It's very deep. It actually came all the way down here. But look on YM. Whoops. Right, we're actually expanding, right? So remember I told you that one asset will start to expand away, the other asset will trace or consolidate. It's just for it to catch up, right? And this is when we form that SMT here. So this is when I can anticipate 930 expanding, right? Because here's 830 expanding away. And then what did we do prior to 930 right here? We just created a lower low. We just created an SMT, right? So I can anticipate that 930 should do what? Expand away. So I actually entered before. I even entered before that because of the strength switch and this SMT. And look what 930 does. Expands. Why does it expand? Because we haven't yet hit anything relevant. We're literally sitting at the daily open right now, I think. If you check. Yeah, look, the daily hasn't expanded yet. So see how we're opening near this like nice little CSD? We're opening 930 with this bulky CSD. So it's like I can already assume that we're gonna expand because we created an SMT. We have strengthened switching, you know. So yeah, it's like I can actually pair my entry with 930. This was a really good trade. Like it went all the way to I think it went all the way here. It was like it was a really nice trade. Like yeah, it went all the way there. Yeah, but yeah, man, we're pretty much out of time here. But yeah, man, hopefully that helps. But yeah, let me know if the PSP things works out for you, and for sure. Oh hell yeah, let's go. Yes sir. Yeah, you're gonna get it, man. But yeah, man, yes sir. I'll send this to you. I'll probably send this to you when I'm done with this call here, which is only an hour. Yep. So yeah, man. Catch you later. Yes sir.